Good evening, community. I am Io White, filling in for our amazing executive director, John Henry, who is doing what he does best out in community. And we have an amazing show for you tonight. Hope everyone is having a great Thursday, filled up, nice and relaxed. Long day, I'm sure, but we do appreciate you for coming and tuning in with us this evening. I'm going to go ahead and get right into the news for you guys and following our events. California State Treasurer Fiona Ma will face trial following a sexual harassment lawsuit filed by former state employee Judith Blackwell, who claims Ma harassed her in early 2020 and alleges wrongful termination after rejecting Ma's advances. Blackwell also accuses Ma for racial discrimination and prejudice following her stroke. Although the wrongful termination charge was dismissed by Sacramento County Superior Court Judge Christopher Kruger, he found sufficient evidence for the harassment and discrimination claims to proceed. This legal battle could impact Ma's aspirations to run for lieutenant governor in 2026. Ma has defended her actions as non sexual and looks forward to contesting the claims in court. San Francisco is set to obtain 17.3 million from state funds to counteract organized retail theft, an escalating concern causing several businesses to shut down and drawing criticism from entrepreneurs who feel neglected by city officials. Most of this grant, 15.3 million, will be allocated to the city's police department to enhance patrols and other prevention measures. An additional 2 million will assist to district attorney in prosecuting the offenders. Mayor London Breed emphasized the need for the funds, pointing the widespread impact of organized theft groups that operate across cities. The funds will also enable hiring specialized staff, enhancing communication, and focus on identifying and curtailing operations that sell stolen goods. A commercial building located on Mission Street between 25th and 26th Streets in San Francisco was engulfed by a two-alarm fire just after midnight on Wednesday. Fortunately, the fire did not spread in adjacent residential building. The San Francisco Fire Department responded promptly and contained the fire by 12:59 a.m. on Thursday. The affected building was previously home to a party favor crafting business named Designer Sisters. However, it's unclear if the building was recently occupied. Preliminary images suggest that the fire might have originated at the back of the property, causing significant damage to the neighboring property at 2969 Mission as well. The cause of the fire is currently under investigation. The Oakland community is mourning following the tragic death of a well-loved DJ, Kendall Seggers, also known as DJ Peanut. He was one of the three individuals shot in a separate incident over the past weekend. Friends and family remembered Peanut as a generous individual who went above and beyond to assist those in need. His significant contributions to the community were highlighted by gestures like driving to Los Angeles Skid Row during the holidays to donate 500 blankets to the homeless and organizing a similar event in Oakland. Peanut's mother, Kelly Seggers, expressed her grief, nothing the outpouring of support for those touched by her son's kindness. And now on to our events. Jumuiya Research Institute is hosting a virtual info session on Saturday, September 16th at 10 a.m. to discuss community action research from African-centered ways of understanding. Go to the link below. The San Francisco Human Rights Commission will host the last community engagement session, September 17th, in the Tenderloin. Check the link below. Let your voice be heard at the San Francisco Human Rights Commission Board of Supervisors hearing on final reparations recommendations on Tuesday, September 19th. There will be a rally on City Hall steps at 12 p.m. and the hearing starts at 3 p.m. in City Hall, room 250 at 1 Dr. Carlton B. Goodlett Place in San Francisco. APRI and Swinnerton are teaming up to bring you STEM at the Park for high school students who are of a passion for exploring careers in STEM fields. Saturday, September 23rd at 11 a.m. to 3 p.m. at the Indian Basin Shoreline Park in San Francisco. Don't miss out. The Empress Theater hosts film director Brenton Geyser's feature-length documentary, The 50, on Thursday, September 28th at 6 p.m. at 330 Virginia Street in Vallejo. Q&A to follow the screening. New vaccination, COVID-19 booster, and monkeypox antiviral pill treatment. Thursdays, 1 to 5 p.m. at 330 Ellis Street, as well as Saturdays, 12 to 4 p.m. at 1221 Mission Street in San Francisco. The Community Living Room open all day, Monday through Friday, breakfast 9 a.m. to 12 p.m., and grab-and-go lunch from 2:30 to 3:30 p.m. at City of Hope Cafe at 750 Ellis Street in San Francisco. Join the conversation at the YMCA Men's Harambe Cuts Shop Talk for ages 14 and up with complimentary refreshments and swag. Thursdays, October 12th, 5 p.m. to 7:30 p.m. at the Bayview YMCA, 1601 Lane Street in San Francisco. Push Dance Company Sanctuary Grand Opening will be Sunday, October 15th at 447 Nina Street in San Francisco. Tickets are on sale now. International Shakeout Day on October 19th. Join in on the world's largest earthquake drill. Register to participate. YCD presents the second annual District 10 Safety Plans Violence Prevention Peace Rally. There will be food, vendors, raffles, music, and more. Saturday, October 21st, 11 a.m. to 4 p.m. at the Monarch Gardens, 428 11th Street in San Francisco. San Francisco Safe will have a Halloween candy explosion on Saturday, October 29th, 11 a.m. to 5 p.m. Admission is free, and the event will include food, carnival games, music, and more. This will be at Gilman Park, 903 Gilman Avenue in San Francisco. Farmers Market located at the Southeast Community Center, 1550 Evans Avenue, San Francisco, every Thursday from now until November 30th, 3 p.m. to 7:30 p.m. They accept cash, debit, and EBT. OMI Cultural Participation Projects, The Lion King, Friday, December 8th at 7:30 p.m. at the Orpheum Theater, 1192 Market Street in San Francisco. Wu Yi presents the Holiday Pajama Jam for the Bottles and Blankets Pantry on Saturday, December 16th from 1 p.m. to 4 p.m. at 4900 3rd Street in San Francisco. They are a new nonprofit and donations are needed. OMI Cultural Participation Projects, The Wiz, Saturday, January 27, 2024, 7:30 p.m. at the Golden Gate Theater, 1 Taylor Street in San Francisco. San Francisco Human Rights Commission has regular bi-monthly commission meetings on the second and fourth Thursday of each month at 5 p.m. in the San Francisco City Hall Room 416. You can also attend via Zoom. Be a mentor in SFUSD. Join San Francisco Unified School District school-based mentoring program, Mentoring for Success. Sign up to volunteer as an individual or group mentor district-wide. Would you like to promote your business, nonprofit, or community impact? Sign up for our Hidden Gems show. Share your expertise on our Educational Thursday or be a panelist on our Sunday's conversation. Keep up with both sides of the conversation's latest shows and community outreach events. Follow us on all social media platforms. You can also subscribe to our newsletter at bsotc.org. BSOTC welcomes individuals who are interested in giving back to their community to join us as volunteers. We value the positive impact volunteers can make and invite you to be a part of our mission to uplift and support our community. BSOTC kindly requests your invaluable support for our podcast and community engagement endeavors. We cordially invite you to explore any of our donation links, as your generous contributions will greatly aid us in enhancing our programming. We would like to take the time to acknowledge the Dreamkeeper Initiative and its support for BSOTC's programming. The Dreamkeeper Initiative amplifies the voices of and invests in San Francisco's diverse Black communities to reform public safety and address structural inequities in San Francisco. Please join us this Sunday for our Sunday's conversation, Understanding and Combating Health Disparities, as well as Tuesday, September 19th, for our upcoming Hidden Gem show. Thank you. And now, without further ado, we'll bring up our guest for the night. And let me get his introduction going. This evening, we have Sean. Let's bring him up. Hey, Sean.
Good evening. Good evening. How we doing?
Good evening. Good. How are you this evening?
Doing great. Doing great. Happy to be back here. Thank you for having me again.
Of course, you're a regular now, so you know.
Got to be
That's
here.
amazing. So we have a great show for you guys. Sean Johnson is a financial consultant. If you are new to the show, he is a part of an amazing duo, actually, and he will be presenting this evening on financial consulting. And those who are not new to the show know him as a regular.
Like I said, it's great to be here. It's great to be back. I'm already excited about some of the other events that y'all mentioned and that you told me about that are happening next year. Can't wait to go out and celebrate and hang out and just be a part of the community with you guys again. I mean, you're doing so much, and it's so important that we get out there and, hey, we participate. We get to know each other and know what resources exist. So it's definitely an honor and a blessing to be a part of both sides.
And you are feel free to go ahead and get your presentation up. We'll have a couple of slides for you guys this evening, community.
Perfect. Cool. Thank you very much. Well, again, my name is Sean Johnson. Again, thank you both sides of the conversation for having me on again tonight. Normally, one of my business partners, Cynthia Yannacone, is here with me, but tonight she's actually with her family because you know what? That's what this is about. All right, we talk about going out there, building a business, and having that freedom. Right, having the freedom of time, the freedom of finances, freedom of location. And hey, she's got that freedom of location right now and she's exercising it. She's having a great time out there with her family. I'm sure she'll tell us all about it when she gets back. But tonight, given that today is, well, this month is September, which is Life Insurance Awareness Month, that's what we want to bring to you tonight. We want to share some information, share some value, really break it down for, because I know a lot of people don't really have that solid understanding of what is life insurance? What's it all about? So I'm going to go through that with y'all tonight. And any questions, throw them up there in the chat. Let me know. Give me a call, shoot a text, whatever we need. We want to get you all the information that's necessary. So starting off again, what is it? Hey, it's Life Insurance Awareness Month. I know a lot of people go, oh, life insurance, that thing, I don't, whatever. Well, you know what? It's only a whatever to people that don't really understand it. Because think about it. What do we have? What do we have in our life that we insure? These things, right? Our wonderful little cell phones. We're always insuring our cell phones. We insure our cars, our houses, our apartments. Shoot, I've had storage units that I've had to get insurance on. We have to get insurance on our health. Why? Why do we have to get insurance on all of those things? Because you know what? If something happens to us in any of those areas, the government or somebody else has got to step in to be able to come through and help out. But when it comes to our lives and us passing away or us being too sick to go out and earn our income that we and our families depend on, hey, all that falls back on is us and our families. We're not forced to have it. Think about that one, y'all. So we talk about life insurance. What's it mean to you? Is this your family here? Hey, here's a couple shots of mine. And having that life insurance in place allows me to move with confidence and know I can go out and celebrate. I can have a good time with my family and know that if something happens to me or whenever my time is that I get called home, my family's going to be good. They get to go out there and carry on and have a great time. And it's not going to be financially devastating because I'm not there anymore. So think about who will be impacted in your life. Now, those of y'all that have been on before, you've heard my story and heard the story about the cabin that my grandparents bought. And when my grandfather passed away, I asked my dad, hey, what's going to happen to the cabin? Because I love going up there. And he said, well, Gramps had something in place. So when he passed away, the cabin would be paid for and it's all good. So I said, okay, and went on about my business. Guess what? Life insurance was that main thing that he had in place. Yes, he had the trust and all the other proper documents and everything, but the life insurance is what kicked in when he passed to finish paying off this cabin. So because he did that, the cabin's always going to be in our family. And because he did that, it created the memories. It allowed the memories and events to take place with my cousins, going up there, hanging out during COVID, having a good time, still being safe. Give my lady and I a place to go and hang out. And guess what? Now that I've got my son, it's a place that I can go and take him and we can go have a great time. If my grandparents hadn't put that part of the legacy in place, none of this would have happened. My cousins and I, we wouldn't be as close as we are because we wouldn't have had that place to go to connect, to hang out, to have a good time. So it's really interesting when we take a second, excuse me, and we step back and we say, hey, how did this happen? How did we get to be here? What's allowed me to be able to be here? And when I think about some of the great experiences and the closeness that we have in our family, because things were different once my grandfather passed, but that closeness we now have that we're getting back, it's because of what my grandparents did. So I want you all to think about what could be done in your family to make sure that you can be that glue. How do we hold things together? So what is life insurance? Do I need it? Why should I have it? Well, I haven't seen a couple things in the chat there. And when people think about, hey, are we too young? Do I need it? Is it too expensive? Well, I want to go over a couple of misconceptions. Number one, too expensive. People think that $250,000 in coverage will cost thousands a year. Nah, a couple hundred a year, which is a couple dollars a month, which guess what? Let's be real. We all waste that. I'm sure we can all think back in the last 15, 14 days and say, well, okay, yeah, I've probably spent $50 somewhere that I didn't need to. I spent $20 somewhere I didn't need to. I got a friend of mine, I planned for $12 a month. We could all probably find $12 a month to get that protection in place. Hey, the life insurance that my employer gives me, it's good enough. Let's find out what that really is. There are some plans that our employers will offer us that'll be cool, that will actually pay out after we pass, but a lot of those will only cover you if you get sick and pass away while you're at work. And a lot of times there's not nearly enough money to take care of everything that you need. So there's things to be aware of. I don't need it. I don't have a spouse. I don't have kids. It's not so much about you. You don't know when you're going to pass on. You don't know. Have you thought about the people that are going to depend on you? You don't know what the future is going to hold. Maybe we don't have a spouse yet. We don't have kids yet. But guess what? For a lot of us, we will. People live longer. I don't need a life insurance. It's so much more than just that death benefit. There are other components and aspects that we can utilize with life insurance that a lot of times people just aren't privy to. If we don't know about it, well, hey, how can we utilize it if we don't know about it? And I see there, hey, one of the questions is, somebody already has life insurance policy. How often should they review it? And under what circumstances might they consider increasing their coverage? Hey, we've got I'll go over it with you all a little bit later, but we've got a plan, a system that we use to figure out how much coverage you need. And you should review it at least every year, if not twice a year. Because, hey, life changes. We do annual reviews with our clients because, hey, we make more money, we change jobs, we sometimes we're making less money. Hey, we have kids. Life changes, so you always want to be reviewing that. And you can increase your coverage pretty much anytime you want as long as you're eligible for it, be it with that same policy or by adding additional plans. There's different ways that we can go through and layer that coverage. So real quick, no life insurance. If we don't have it, what could happen? Here's a few things. All right, family members can't afford to get to your funeral. Maybe you can't even pay for the funeral. Maybe they can't even pay for the funeral. We've all seen those GoFundMe accounts. GoFundMe is not a life insurance plan. The church car wash and chicken cookouts, that's not a life insurance plan. That's a lack of planning. Right? We can't say that proper goodbye to our loved ones because the funds aren't there. We have to do whatever we can afford. Families can't process properly because they can't afford the grief counseling. They can't take the proper time off work. They get even more stressed out because they've lost money. You've lost an income that's part of the family that was allowing things to go. Right? There were goals we wanted to reach. There's debt that often time has to be paid off. There's so many things that we don't think about while we're alive because we're still here. We're providing all that. We're handling it. We're taking care of it. But think about all those things that we haven't thought about. Right? Another question I see in here. How do life events like marriage, childbirth, purchasing a home impact the amount of insurance coverage one should consider? Great question. It's all in there. It's all things you want to think about, because when it's no longer, when you know for sure it's no longer just you, when you have a mortgage for the home that your family's living in, or even a mortgage for the home that you're living in that you want to make sure goes to your family when you pass on, you want to make sure that you've got those things covered, because we don't know. It's not a matter of if, but when we pass away. We just don't know when that's going to be. Now, next thing we look at, what is life insurance? Life insurance is money. It provides that money that we need, that our families are going to need. It gives that protection, that peace of mind, that knowledge of, hey, you know what? We're going to be able to be there and be good after we're gone. Our family's going to be good and have that protection. It can provide that income to us while we're alive. It's actually to be life insurance, not just death insurance. It allows us and our families to reach our goals, regardless of whether we're healthy, we're sick, we're here, or we're gone. Our goals can still be reached with a proper protection in place. It gives us that security of knowing, hey, all of our assets and everything are going to be taken care of properly. We transfer that risk. Somebody else is taking on that risk of us being around or not being around. We get that peace of mind. I can go to bed very nicely. I can go drive someplace. I can get in my car with all the craziness going on out there. Guess what? I'm actually able to have that peace of mind for myself, knowing, hey, I'm not planning on going anywhere, but God forbid I do get called home what I would consider to be early. Guess what? My family's going to be okay. At least it's not going to be a financial emergency. That's very comforting to me, and it's comforting to my family to know that they're going to be good if I'm not. It's additional funds for us to do the things we want to do. It can be an inheritance. I know people talk about getting an inheritance when their loved ones pass away because they worked hard, they've got a house, they've got this money. Well, people that didn't already have that money, didn't already have the house, guess what? This life insurance can actually be the inheritance. I've even heard of people going through and getting policies within a church and saying, hey, I want to make the church a partial beneficiary to this plan because I want to give back to the church that's done so much for me throughout my life. It puts you in financial control. Again, you're not going through financial devastation. And the biggest part, it's OPM. What's OPM stand for? Other people's money. Let the insurance company's money take care of you and your family. Don't worry about having all of that on your back. It's all good. Somebody else can cover it as long as you put the proper plans in place. So do I need insurance? Just thinking about this. Do you have personal debt? Do you have a car that's not paid off? Do you have a house that's not paid off? All of those things, hey, if you're not around or you can't afford to pay for it yourself because you're sick and injured, it's got to be there. Do you have children or family that need you? Is there anyone that depends on you financially? Do you want to see anyone successful financially? I don't know. Ask the people that you care about. Ask the ones that are going to be left behind when you're gone if you should have insurance. We sit down and talk with people, and if we sit down with one spouse and they say they're going to get something, but their spouse isn't interested, I don't need to whatever. Let them do their thing. Well, the reality is the spouse that gets covered, if I went and got life insurance and got that protection for myself, guess who that means is covered? It means my lady's covered. If she doesn't have insurance, I'm not covered. Right? Think about that. If I get coverage and she doesn't, and she passes away, I'm the one struggling. It's really important that we get that equal coverage for both partners in a relationship. Whether it's your husband and wife, with your significant other, or it's a business partner, you have those plans in place to make sure that things are taken care of if life happens to us unexpectedly. Now, there's a lot of different types of insurance out there. I'll break down a couple of them for you in a second here. Now, number one, we've got term insurance. A lot of people have heard of that. It's temporary. It lasts for a specific period of time. A lot of times people will get term insurance for we'll call it mortgage insurance. So they've got a 30-year mortgage. They'll get a 30-year term policy. So at the end of 30 years, that policy goes away, and they should have had the house paid off by then. But if they passed away while they were still paying the house off, hey, the family gets to keep the home. Typically, those plans, if you don't pass away, nothing happens. There are new plans out there that are still temporary to cover that need, but they actually give you living benefits. I'm going to break that down for you. A couple other types. That's your temporary life insurance. Then the rest of them we're going to talk about here are permanent. Your permanent life insurance types. You've got whole life. You pretty much with that, you pay into it for your whole life. Now, these permanent plans, a lot of them will actually be able to allow you to have cash accumulation within them, which is pretty cool. So whole life, you typically average 2 to 4% rate of return. You've got universal life, kind of a newer version of that. It's still permanent, but you don't always have to contribute to it for your entire life because you get a higher rate of return. You can actually earn 4 to 6%. Variable universal life, that gives you the opportunity to really be invested directly in the market and capitalize on those big gains. But you also have that risk involved there where you participate in the losses of the market as well. So if that's something that we're interested in, hey, that's an option as well. Now, index universal life, that's kind of that nice blend. It mirrors the market, but it's not in the market, averaging 8 to 12% rate of return there. Again, permanent coverage, but it does not have to be funded for your entire life. Most of the time we structure these plans for people to contribute until they hit retirement age or for 15, 20 years if they just want it for the insurance and not worried about the accumulation. There's so many different types out there. There's different policies. There's different companies. There's different ways to structure them. There's different types of policies within different companies. It's very, very important that when you look into this, you talk to somebody that knows, that's experienced and educated, and they're out there looking for you, not looking out for themselves, and really be able to break down what the different types of policies are and where each of them have their particular place. They all serve their purpose. You may hear people talk about this all-in-one plan, that it gives me this and this and this and that. That sounds good, but let's keep the main thing the main thing. If you bought a permanent plan for permanent coverage, well, what if you use that permanent plan for a temporary issue? Doesn't that throw off the permanent plan? We got to make sure we're using the right tool for the right job. Now let me break this down for you a little bit. The new terms with living benefits. How do these work? It's life insurance. It protects you, takes care of you while you are alive. Okay? If you're diagnosed with a critical illness, up to 90% of that policy value goes to you as a check that you can do whatever you want with it. You can pay medical bills, you can go to Disneyland, you can buy a new car. All good. Right? If you're diagnosed with a chronic illness, you need assistance with 2 or more of the activities of daily living. Bathing, continence, eating, dressing, transferring, standing up. You need help with any of that. Guess what? You've got coverage. That money will go to you. If you're diagnosed with a terminal illness, up to 100% of that policy value can go to you to get your affairs in order to do whatever it is you want to do. And then, yes, it is life insurance. You passed away. That money's going to go to your beneficiary. And guess what? That's going to pass on to them tax-free. And there's also an option there, disability income, up to $2,000 a month. Really great ways where you can take care of yourself. And when we talk about taking care of yourself, think about your income. If you weren't able to earn your income because any of these things happened to you, what would happen to you as a single person even? What would happen to you? What would happen to your bills, your rent, your mortgage, your cars, the lights, the cable, the internet? Right? What happens to you if you can't earn the money to take care of all those things in your life because you got sick or injured? That's what this plan is for. I always say, as we're going through life, we're building up our assets and we're paying down our debt. Well, as we do that, let's say we create an X. Well, at the bottom of that X, there's a gap. There's a gap. And if something happens in that gap, we need to make sure that that gap can be filled to make sure that, hey, we can continue moving forward with our goals, to achieve our dreams, to take care of ourselves, take care of our families, take care of our loved ones. Make sure that we're not adding to the financial burden, but we're actually continuing forward to make it better. Now, the next point I talked about, the IUL, Index Universal Life, one of the most powerful tools out there if we know how to use it correctly. Now, it's a hybrid plan. Why do I call it a hybrid plan? Because it combines three places where people put their money. Number one, people put their money in the bank because it's safe and secure. Number two, people invest because they want to make those high rates of return. Number three, people that are in the know, that top 5% of wealthy Americans, they understand the tax advantages of utilizing insurance. We combine these, guess what? That creates the IUL. It gives you what we call perks. So number one, protection, because first and foremost, it's life insurance. That's not a matter of if, but when we pass away, that's going to pay out to our loved ones. Number two, an emergency fund. How many of y'all have had an emergency in life and you had to pull money and max out the credit cards, liquidate your accounts, pull money from a 401k, 403b, and got penalized and taxed from the state, taxed from the government because you needed access to your money when you needed it, not when somebody else told you you could have it? Guess what? Funds within the IUL, as that grows up, when there's money there, it's yours. You can touch it when you need it for whatever you want. No questions asked, no penalties, no state tax, no federal tax. Gives you some nice options. It can be structured for a retirement plan. If funded correctly, it could be your retirement. For most people, it could be a nice supplement to your retirement. And let's go back to that tax part. Hey, that's tax-free income in retirement. Pretty powerful, because who knows what taxes are going to be besides higher. That's one thing we can pretty much promise you. It can be used for a college fund or anything for our kids. Just a savings account for our kids. We can use it for a savings account for us as well, but think about it for our kids. We use these plans for college that are designated as college funds. Well, the money's got to be used for college. What if they don't need it for college? What if they want to go out and start a business? What if they want to wait and buy a car, down payment on a house, pay for a wedding? The funds in here we can use for whatever it is we want to use it for. And I like having that flexibility for myself. And my clients have been real happy to have that flexibility and be able to do what's necessary for them when they deem that it's necessary. So I want to talk to you about a couple of the services that we offer. And excuse me, y'all, but bear with me as we go through this, because I know it's going to be a difficult part, because I'm going to talk to y'all about some real stories. And I want you to think about if these things were to happen to you, because this is all real and dear to my heart, because these are friends and family that I'll be telling y'all about. But I want you to understand how important all of this is that we're discussing tonight. So the benefits that we're really providing for people. Number one, let's look at protecting that income. What does that income protection really mean? It means having the proper protection when life happens. So, scenario. We've got a client, excuse me. They want to save for their child. That's all they want to do. They just want to get something going so their child can go through, they can go to college, they can buy a car, they can buy a house, whatever it is. When their child gets to that point, they want them to have the money so they can do it. The concerns, limited budget, they didn't have thousands and thousands they could work with. They're like, I don't need anything for me. I'm not trying to save money. I'm not worried about it. I just want to make sure my kid's good. So we sat down and talked with them and said, well, think about this. You want to make sure your child is good, but who's making sure your child's good? I am. What if something happens to you? Who's going to make sure your child's good then? He said, okay, that makes sense. I get it. Here's what we did. We clarified the goals. We talked about the importance of protection for both of them. We were able to set both of them up with protection. Fast forward, a couple years later, this client was actually diagnosed with stage 3 throat cancer. That 2-income household went to a 0-income household like that. They could have accessed up to 90%. They only chose to take 75%. That 75% was several $100,000 that allowed that household to continue on. Now, unfortunately, this client did end up passing away. So the remainder of that money went to the family as a death benefit. And we're able to do some great things to take care of his son. But you know what? And this is them. I wanted to cover their faces up, but you know, the fact that this was somebody that didn't even want to do anything, but we talked to them about the importance of it. We were able to get them qualified for a plan that had living benefits. They were able to use those living benefits and make sure that when there was no more income coming into the household, we replaced that income for them. We were able to replace that income. And in a lot of cases now, especially with the advance in medical technology, hey, people live with the diseases. After they get sick or injured, they heal you. They keep you around. Well, guess what? Having that money come in does, it allows you to take that time to focus on healing, not, oh, shoot, I don't care. I know I'm not fully better yet, but I got to go back to work. Getting plans like this in place allows you to take that time to focus on you and healing and being good for yourself so you can then be good for your family. Next benefit. Again, talking about that life insurance and how do we help people out? Get that right, proper protection at the right time. Potential client A, they've got high blood pressure. They've had heart attacks. They've had strokes. They've got stents in their heart, and they're a 2-time cancer survivor. Next one, potential client B, smoked for over 45 years, severe COPD, end-stage lung disease, on oxygen 24/7 in a board and care facility. Do you think either one of these people could qualify for, much less afford, to get any type of life insurance? I just described my mom and my uncle. It's a blessing that my mom is still with us. It truly is. And because of this business and my ability to work from anywhere, I'm able to still go through and do what she needs and take care of her. Unfortunately, my uncle did pass away. He did succumb to that severe COPD. But you know what? Because we were able to get him covered, that allowed us to take care of some extra bills, some unexpected bills. It allowed us to fly his cousin in to say goodbye because they couldn't afford it on their own. But there's so many things that we're able to do, the little incidentals that weren't known about. And despite their conditions, despite my mom's health, despite my uncle's health, we were still able to get them coverage that was affordable for them. My family's been a recipient of a death benefit check because of my business, because of what I'm doing. I just wish somebody had talked to me about it sooner because we could have done something different. We could have done something better. Don't wait till it's too late and we're hoping and praying that we can find a way to get some sort of basic coverage. Take the action now. It's never too early. There's no such thing as too young to get that coverage going. All right. How do we go through doing this? Well, we take our time with our clients. We review their financials with them. We help them figure out what is the right amount of insurance. We do that because it needs to happen. We've got to make sure people have a knowledge and understanding of what they're doing. Don't just do it because I said so. Let's do it because it makes sense for you and your family. Now, this next one, proper protection. This actually looks a lot like the family that we sat down with. Client of 4 said, hey, you know what? I'm covered already, but I'll hear out a friend. We sat down with them and talked out. Found out the plan that they had, it was term insurance that was only on the mom, and there was called riders. The family, the dad and 2 children were added to that policy. So if mom passed away, that policy paid out, their coverage would cease to exist. And it was an increasing premium, meaning in another couple of years, they weren't going to be able to afford it anyway. Because somebody just came in and sold them something and didn't actually break it down and tell them, hey, what is this? How does it work? How's it going to work? What we were able to do was sit down with them, explain to them what they had so they understood it. We found their real wants, needs, and goals. We were able to get plans for the husband, the wife, and the daughter. Now, their son was diagnosed with Down syndrome, but guess what? We were able to add him to his mom's policy. Because we have options, because we have knowledge, we were able to get these things set up. Right? Very, very powerful when you understand the value of doing these things. And this reminds me of another client that actually went through and they had a term policy with those living benefits. And they said, hey, I want to cancel it. I want to do something else. I think I want to cancel it. I said, nah, come on, let's wait. We know the importance of it. I also knew some of their health history and some of their smoking habits. And you hang on to it. We waited a little bit. It was end of the summer that year, and I said, no, Sean, hey, I want to cancel it. So we canceled it. We let it kind of run its course, and it stopped a few months later. In December, I'm getting together. I'm hanging out with the family again. We're talking, and he comes over and says, Sean, I got to talk to you for a second. I've been diagnosed with stage 4 cancer. Is there any way we can get my policy back in the books? Nothing I could do. Nothing I could do at that point. It had been canceled. It had been paid for. It's done. I can't get you coverage after you're already sick. We never know when life's going to hit us. Please, let's make sure we've got the proper plans in place to take care of ourselves and our families. Almost done here, y'all. But I want you to think about these things happening to your family. Now, long-term care, it's going to be something really big in California come next year. We're going to need to have it, or we're going to start getting some little tax penalties. So let's start looking into it now before it's too late. Long-term care, potential client A. They watched their sister have a severe stroke. Sister's now 100% blind. Paralyzed on her left side, has to go into a full-on 24-hour nursing home. No choice. We don't have a choice. We can't take care of her. She thinks, what if this happens to me? I want to make sure I've got the coverage. I want to make sure I'm not a burden to the family. Client takes out a long-term care plan. Costs about $7,000 a year, pays for 8 years. Do that math real quick. $7,000 a year for 8 years. They have a massive brain hemorrhage. They pass away after being sick for 3 days. Y'all, what do we not need when we're only sick for 3 days? Long-term anything. There's no long-term care needed. Guess what? That was a long-term care only policy. That $56,000+ went 100% to the company. My family didn't see a dime of it. Not a dime. Why? Because somebody just went in and sold her something. These are my aunts. The one I'm talking about is here in the white. They saw her walking in. She said, hey, I need some sort of protection because of this. They sold her something. Had someone talked to me about this sooner, or someone from my company had talked to her and not been scared to go out and talk to somebody, it would have been different. We would have been able to get a plan that could have had that cash accumulation. It definitely would have at least had that death benefit. And when she passed away, that money would have gone back to the family. Not some massive company that didn't need it. I don't want to see a single other family robbed. It's not right. It's not fair. It's not necessary. We need to make sure we're putting the proper plans in place for the right people. That's why we were so passionate about this. We've seen this happen far too many times, where somebody goes through and they don't get the right plan just because somebody wanted to sell something to get another tally and go on another vacation. That's not what it's about. It's about actually going out there and serving people, making sure people are properly taken care of. Next part, kids. How many of us have kids? Have we thought about what their future looks like? I know people think, I don't want life insurance on my kid. My kid needs life insurance. Hey, most unthinkable thing ever is to have to bury and say goodbye to our children. Guess what? Mindset's probably not going to be there. You're probably going to want a little bit of time off to process the unthinkable. How do you do that when you still have to go to work to earn that money? It might be nice to have that little bit of cushion there so you can process. And God willing, that's not the case. You just create that legacy for your family. But what's really important about protecting our children, we drove up to talk to a family, and aunts, uncles, everybody's up there, right? And one of the aunties said, nah, I'll think about it, I'll do something later. The other auntie said, yeah, you know what? Let me go ahead and get something for my babies. I want to make sure my kids are good. Well, her babies, one of them was 17 years old and a track star. He's choosing which college he wants to go to on a full scholarship, right? Next time we went back up there, after we got everything in place, I walked right past that young man and didn't even recognize him. Why? Because in 6 months between the time he turned 17 and 18, his kidneys shut down on him. He was so swollen up with liquids and fluids and everything, I literally did not recognize him. His mom said, thank you, thank you, thank you that we did this, that you came up, that you talked to me, because there was a time he was depressed, he wasn't taking his meds. I didn't know if he was going to be here. That young man's probably not insurable because he got so sick at such a young age. That's going to be an issue for the rest of his life. Thank God he spun around. He's doing better now. But what if mom had said, nah, you're almost 18. You can get your own policy in a few months. What if? We never know. We can get our kids covered as soon as they're 2 weeks old with a Social Security number. Get that coverage going right away before anything can happen, before they get any type of diagnosis of anything going on. Once we are approved, they cannot take that away from us. That's ours forever, period. And let's make sure as we're doing all this, we're setting it up properly. Get the legacy planning in place. Get the wills and trusts in place so that your wishes can be executed with the funds that you're leaving behind to your families. And don't take my word for it. It's a ton of information, which can be turned into money in books. All right. One book real quick here, Money, Wealth, Life Insurance. How many of y'all have a bank account? How many of y'all bank with B of A, Wells Fargo, JP Morgan, US Bank? Let me ask you this. For the $5 to $19 billion, which this was back in 2013 when the book was written, $5 to $19 billion in life insurance assets. You can't kill a bank. A bank can't be texting, walking across the street and get taken out by a Tesla. Why are they doing this? Because they understand the value and the power with these things. They understand the benefits that are in life insurance. They understand the assets that are there. Take a look at some of these companies. How many of them are you giving your money to in the last week? Disney, Panera Bread, AT&T, Nestle, a little company called Pfizer, Johnson & Johnson. All of these companies are utilizing life insurance. You can't kill a company either. There's a lot of value and powerful abilities and tools and flexibility and freedom when we use these plans the right way. So everybody, I'm asking, I'd love to sit down with you and talk with you about this. Let me show you and break down what your options are. Talk to somebody that's experienced. Talk to somebody that cares about you and wants to see you and your family be successful. So how much is the right amount? Here's our little formula that we use. We use a dime method. Number one, your debt. How much debt do you have? Credit cards, taxes, personal loans, other loans we won't talk about, right? Whatever those debts are, we want to make sure we get those covered so you'll pass it on to your family. Number two, income times 10. That's an ultimate goal. We don't have to do 10, but why do we say 10? If we can replace your income, your annual income for 10 years, guess what? That gives your family plenty of time to get things back in order. And statistically, it takes about 10 years for when the primary breadwinner passes away for a family to get fully back on their feet. Guess what? I don't feel so bad if I leave my family 10 years worth of my income. Family, I give you 10 years. That's a lot of time to figure it out. Next, mortgage. All right, we mentioned that a little bit earlier. Let's make sure that the house is paid off if one of the people that's responsible for paying for it is no longer around or able to help pay for it. And then education. If you were to pass away prematurely, how much would you want to leave for your kids? You want to pay for all of their college or at least leave them something? Add that in there, less any other protection you have or other liquid assets that you have. That equals your income protection need. It's not just go get $10 million just because. It's not just go get $1 million just because. It's let's figure out what you need, what you want, and what you can afford. Because oftentimes those are three very different things. But we want to make sure we do it the right way. So how do we do that? We take these next steps with you. We complete the PFR, personal financial review. It's only that one page, right? We go over your spending habits. Take a look at where your money's out, what's going on with it. Calculate your needs, help you achieve your FIN number, your financial independence needs number, put your dime together, and make sure that you're on that right track to be successful and that you're able to leave everything behind to your wishes, not the government's. So there's a lot of different things that we can offer, that we can do. Please reach out, give a call, carrier pigeon, email address, whatever it is that y'all need, however y'all can communicate, but reach out to us. There's a wealth of knowledge in the knowledge of wealth, and I'm here and want to be able to share it with you. So everyone, thank you so much. Appreciate y'all being on. Trust we brought some value tonight. And hey, if we have any questions, certainly open to chatting about them.
Thank you so much, Sean, for that amazing presentation. Even though you guys have been here several times, we get, great Q&A going. I still have, different questions now that even after the last time you guys were on. For myself, I definitely was one who had the misconceptions of, do you need life insurance, or feeling intimidated, thinking that it would be too expensive. And like you said, just sacrificing that cup of coffee, sacrificing those little vices that we have on a day to day, that we make ourselves things that we need to go on throughout our days. It helps and it goes a long way. So for me, my thing, for my children, I think that it's very important that we do look into that. But I feel that I did start too late. Both of my boys do have pre-existing conditions. So it's been a trial trying to get them sufficient life insurance. What would you say, or what are your ideas and or policies for people with children and or themselves with pre-existing conditions? What does that look like? What do those policies look like? Are they more expensive, or because that, to me, that in its own is intimidating. So are they more expensive, or is there a specific type of policy geared towards people who have pre-existing conditions?
Yeah, great question. And thank you for opening up and sharing that information and sharing your feelings, because so many people are out there with the same, but we're scared to open up and have the conversation about it, which is why I love being here. When we look at any type of insurance, like think about your car insurance. If you've been driving for 20 years and no accidents, 20 plus years like mom, your insurance is dirt cheap.
Mm-hmm.
Now, if you've been driving for 10 years, you got 2 speeding tickets, it'd be a little more expensive. You've been driving for 5 years, you got 3 speeding tickets, an accident, and a DUI, you're going to struggle to get coverage, right? So it's the same type of thing when it comes to life insurance. It's all a risk assessment. So if we have people that have pre-existing conditions, or they're older, or they smoke, let me be real. Yes, it is going to be a little bit more expensive, but it doesn't mean that it's unaffordable, right? If we talk about saying, hey, I want to get, if a 25-year-old wants to get or needs $500,000 in coverage, not very expensive. A 55-year-old wants $500,000 in coverage. And guess what? You're a little bit closer to that policy paying out, so it's going to cost you a little bit more. But so maybe that 55-year-old doesn't get 50,000. We get them, or 500,000. Maybe we get them 250,000. Right. So there's companies out there that, I mean, any company is going to allow us to be flexible with the amount of coverage that we get. And as far as being able to get people covered with pre-existing conditions, most things that people are concerned about, that they think as a pre-existing condition, I can't get coverage, it'll be too expensive, they're not that big a deal. They're really not. And a lot of times the company will even give you a bonus credit because, okay, yeah, like the cholesterol's high, but aside from that, we're healthy, we've been going to the doctor, we do work out. So they'll give you some little couple of bumps up, right? For children, it really depends on what the diagnosis is, but there are options. Like I said, we were able to get coverage for that child that was diagnosed with Down syndrome. And that was a powerful thing, because, hey, we still want, especially during those young years, if something happens, hey, it's going to be tough by itself. It's even tougher if we have that financial burden stacked on it.
So since we're talking about older people and them getting policies, no offense, mom and dad, if you're watching, am I eligible to obtain a separate life insurance policy for my parents? They've been married 53 years. They're both in their 70s. They have their own separate, but what would that look like for a child trying to get life insurance on their parents, and considering that they are at that max out age?
Mm-hmm. It's doable. So it depends on the company and the type of policy that you're looking to get. But when I got my mom and my uncle covered, they were both in their 70s. Right? They were both in their 70s with those conditions. So it's all very, very doable. It's just a matter of and again, because I work with over 70 different companies. Well, I've got a lot of options to say, okay, hey, what's the case? What's the scenario? How much coverage do we need? Again, how much can we afford? And what really makes sense? And yeah, that is, you put it together from there. So we can absolutely be able to get your parents taken care of.
So I know I heard you saying that both your uncle and your aunt both had health issues when obtaining their life insurance policies. What if someone is diagnosed with a terminal illness and then they want to try to get a policy, or with like the pre-existing conditions and then it turns terminal already after obtaining the policy?
Cool. So first part, do it now. The last couple of presentations I had now flashed the screen 8,000 times. We're never younger than we are right now, and most of us aren't going to be any healthier than we are right now. Right? So get that coverage in place now, because hey, I got my preferred elite ratings. If I decided I wanted to knock back a handle of vodka every night, go to McDonald's every day, and start smoking 2 packs a day, they can't take my rating away from me. Right? I've already got that. That's locked in. It's permanent. So it can't, if something happens after the fact, you're okay. That's why we say do it now. Now, if someone's already been diagnosed with a terminal illness, so like the person I mentioned that canceled their policy and then was diagnosed with cancer, there's not much I can do at that point to get them coverage. Now, there are some options. So even with pre-existing conditions, as long as the mental is still there, right? If we lose the cognitive abilities, then that's going to wipe it out, right? Because then people can't say for sure they know what they're talking about or signing. But outside of that, there are options for people that are older, even with pre-existing conditions, diseases, and all that. Typically, those aren't going to be the hundreds of thousands. Those are going to be what's called final expense coverage, right? And we can do that for people at any age. But the final expense coverage, it's usually like 5 to 50,000, something that'll literally take care of those final expenses for the family. And then we can go ahead and get those plans in place for people that are older or that are sick. Something that some of those will come with, it's called return of premium. So just like you can do a term policy and get return of premium after that term expires, you can also do a return of premium on some of those final expense plans. So if someone were to pass away in typically the first 2 years of having those policies, the beneficiary would receive whatever premium had been paid into that policy, plus an additional 10%. So, like, yeah, 10% of your money is not bad, right? But that's if it's for health issues, right? Now, if it's not a health issue, if it's hey, they're walking across the street and a Tesla takes them out, well, that's accidental. That full death benefit is going to pay out.
So I know you were kind of talking about term life policies and someone having to go into facilitated care. I'm an in-home care provider as well as a couple of other jobs that I have. But for my client specifically, she didn't want to go into hospice. She wants to be in her home. What if there was someone that needed to go into hospice or facilitated care? Can a policy pay for extended care and board for like a facilitated care place for them to go to? Is there a specific type of policy that can help to pay for that?
Absolutely. So that would be your long-term care and your living benefits, right? Excuse me. Different, slightly different tools, but similar functions. So again, if we talk about the living benefits, if we're a critical illness, we have a heart attack, stroke, cancer, ALS, major organ transplant, things like that. That's going to give you up to 90% of that policy value that you can do whatever you want with. Right? So you can have that heart attack and be good to go in 2 weeks and say, hey, let's go to Disneyland. Let's go to Disney World. Shoot, I got all this money. Let's go. Might recommend waiting more than 2 weeks, but you can do whatever you want with the funds. So it can you don't have to worry about they have to be used for medical purposes. Now, if you get long-term care, that's like your chronic illness, where you need assistance with 2 out of the 6 activities of daily living. Now, with that, that'll pay you typically 2% of the death benefit on a monthly basis for as long as you qualify for it. So that'll allow you, and again, depending on the company, some companies require that be paid to a skilled facility, and other companies say no, it can go to anyone. So you can be at home, and your loved ones can be the ones that you're paying to take care of you, where you're comfortable and all of that.
That's awesome. Okay, so hypothetical. I'm 45. I have no children. I don't have any life insurance. What would be the best policy for me?
We'd have to go back to that dime. What's your insurable need? Right? Do you own a home? Do you have family that you care about? Are you going to leave debt to someone if you pass on? Do you have someone you'd like to leave a legacy, leave money to? All of that would determine what's going to be the best plan.
Okay. So all of that changes, right? Say I'm single, I do own my own home, got a great career, don't have any children. We find the policy for that best fits my needs at the time with me being single. Now, if life events changes, I get married, childbirth, purchasing another home, an additional home. With the life insurance coverage, would I want to? I know I would want to obtain more insurance to insure these new things, but would my personal policy change as well?
So when you say your personal policy,
So like
the
policy we come up with me being single, no children, great career, homeowner. And then the additional life events happen. I get married. That's a different type of policy. I have a kid. That's another different type of policy. Would I want to then add on additional personal insurance for myself in addition to all of the other ones?
Mm-hmm. Yeah, so we would take a look and see, hey, how much coverage did we get? Because again, it really comes down to, and this is big, like one of my mentors told me this, what people want, what people need, and what people can afford are often 3 very different things. So that's why we want to take the time to really understand where someone's at financially. And yeah, you're single, you own a home, I would still want you to have your permanent plan of some sort. Does it need to be $1 million yet? Excuse me, probably not. You probably don't need that, but if it's affordable, could we do it? Well, yeah, if you're bringing home 10 grand a month, it makes more sense because you're worth that, which I kind of hate that the terminology there, but it's more justified when you're bringing home 10 grand a month versus 1,000 a month to get a million in coverage, right? But then it's also affordable. You own a home, I want you to have that term with living benefits because like I said before, each policy's got its own purpose. So if we say, hey, we're building up our assets, but we're paying down our debts, there's that gap here between my elbows, right? So what happens if something happens there to you while you're single? Well, you're still alive, right? Hypothetically, somebody has a heart attack. Well, they're just going to patch you up and say, quit eating McDonald's. And you're going to go on about your business. And by the way, pay those bills. Now, there's nobody else in that house but you still need a place to live. You can't work for 6 months. How are you going to pay your mortgage? What are you going to do? Where's that money going to come from? Are you going to pull from your 401k and get taxed and penalized? Are you going to lose the house? Are you going to try and go back to work too soon and get sick again? Right? So all of those things come into play.
That,
And
that third one would be me.
exactly, right.
Going back to work. It's all right. It's okay. Just bring the defibrillator. I'm going back to work.
Put some tape on it. It's okay.
It's okay. I didn't need that arm anyway, you know?
Right? I got another one to glue it. You got some super glue? Come on. We'll make it work. And then the other part there is having that layer of coverage. If people think like, why do I need two different plans? Well, if your permanent plan is meant to give you that permanent insurance, and if we're funding it correctly, where the goal is to get that cash accumulation as well, why would I want to pull from that permanent plan, like I said, for a temporary issue? That's my permanent plan that I'm planning to fund for other purposes. That term is going to be there as I'm still growing through life. I'm still building up my assets. Right? If something happens to me, I can have money come in from that term policy. And then after that 30 years is up, or whatever that time period is we select, the house is paid off. I've been able to save some money. I don't have the debt anymore. And now I no longer need it. But I've had that protection in place so I can continue my life, even if life throws me a couple of funky curveballs. So it's important to have the proper coverage for the proper need, not just say I've got this all-in-one solution.
What does overinsured mean?
Overinsured. My personal opinion, I don't think you can be overinsured. Because what's that life insurance? What's going to happen to that life insurance? What happens to it? Like, you pass away, where's the money go?
To whomever the beneficiary is, right?
Right, which in theory is someone or an entity, a church, a foundation, a nonprofit that you care about, that you want to see be successful. So, overinsured in my book, no such thing. Huge asterisk, as long as it's affordable.
So what if? Okay, so if you set it up for a beneficiary, right? Is there a way you can integrate your life insurance policy into a will and trust?
Absolutely. You definitely should. You definitely should. And let's go back to the overinsured part. So what would make someone be technically overinsured? Going through and having somebody spend money on $1 million of permanent coverage when they don't have a need for it right now. And they're struggling financially to cover that. If they've got the financial means to get more coverage while they're young because it's cheaper, then cool. I can understand that. That makes sense. But to take a 25-year-old that's living at home, bringing in $5,000 a month, and get them, $1 million in coverage, 1.5 in coverage, is it really necessary? Right. So it's always, for me, it's on that case by case basis. Right. And then when you look at say it one more time. I lost what I was going to say there.
Can you pay it into a will and trust, your life insurance?
Yeah, absolutely. And once the difference between a will and a trust, a will is it's your wishes, and it's a contestable document, right? Doesn't necessarily hold up in court. People can argue it. A trust is a legal binding document. It will hold up in court. You can't argue that. So I always say, hey, if you own property or you've got over 6 figures in assets, you definitely should have a trust. Now, if all you own is a 1-bedroom apartment and the best, the prized possession is a 46-inch TV, you don't have to worry about the trust so much. It's not that big a deal. Nobody's going to fight over that too much, right? But once we start doing really well, we've got those assets that could be contestable. Get the trust and have the trust be the owner that could be the owner and or the beneficiary of your life insurance policy. And then at that point, you can specify within that trust who are the beneficiaries, who are the heirs to that trust, at what point do they get this money. And you can get all kinds of technical with the trust of saying, hey, well, only my third child would get it if they graduate from Harvard on a Thursday after they bowl with both sides of the conversation, right? You can put whatever stipulations you want in there, right? But yes, definitely having that's important.
So for, like I explained, both of my children have pre-existing conditions, right? My younger son, who is autistic, on the spectrum. It's been an uphill battle, to say the least, to find someone who is willing to um, give me a good policy for him. What might the premiums be for a child or young adult with special needs who requires pay services or daily care?
So the premiums all based off of the amount of coverage and the rating, right? So and again, companies as well, because different companies will have different cost of insurance and different underwriting guidelines. And then you also look at, okay, hey, am I trying to get 50,000? Am I trying to get 250,000? So it really all depends. And that's another great way where we're able to work with people to say, hey, what's the scenario? Let me call up and talk with the different companies to find out what their options are, what they might extend to us before we go through and submit a full application and put people through all of that. Let me have a conversation with you again, right? Let's have that conversation, find out what's going on. Let me have a conversation with a few of them and see what our best direction is going to be. Then we come back and figure out, okay, hey, what makes sense financially that we can put towards whatever our goals are, and then we work from there. And we can also, something else that a lot of times people don't think about, which goes back to, hey, I'm now married, I now have a kid, I have another house, I have more of an insurable need. You can actually increase your death benefit with existing policies often. Right? Now, depending on how much you're trying to increase it, you might have to go through underwriting again, or they might ask you some questions. But a lot of times you can take an existing policy and increase the death benefit coverage. You don't have to get another plan. Right? Now, and other times, right? Because people don't want to tell you that. They want to tell you, oh, just get another one, buy another one. Yeah, because then I get paid again.
Right. I got to put that in my notes.
Right? That's not what it's meant to be about. And then let's say we start off with $250,000 now and we're in our 20s. All right, well, I need more coverage than that. I need a lot more coverage than that, especially once I buy a house in California. Right? You start off in your early 20s, you don't own a house, you got $250,000, that's going to protect you. Hey, I just bought a house. Okay, now I need another 500,000. Just get another plan. At that point, you get another plan. But something like that would likely be that term with those living benefits, because you're only going to need that additional coverage for the period you're paying off that house, right? After that, that coverage is no longer needed, so that plan can drop off. And then you still have your permanent plan to take care of whatever you want to pass on your loved ones whenever it is you get called home.
That makes a lot of sense. Mm-hmm. So overall, other than the primary benefits of financial security, are there any other advantages or features that modern life insurance policies offer that people might not be aware of? Of course, like I said, the benefits of the financial gain, but is there anything else outside of what is advertised that people may not know?
Yep. So the one of the biggest things is really those living benefits, because people think of life insurance as death insurance. Right? They don't think about how it can actually pay them while they're alive. So having those living benefits, number one, that's extremely powerful. There's about 75% of those policies with living benefits, something pays out, because, I mean, shoot, everything's fake now. There's going to be a lot of cancer going around, unfortunately. Like, we just kind of, it's a thing. We see that increasing. Excuse me. So having those living benefits is much more valuable than I think most people think about. They think, oh, it's not going to happen to me. There's a lot of stuff in there that could happen to you. So let's make sure we've got it, right? The other components are when we talk about that cash value life insurance and the funds that build up within that. Again, I can't stress enough, the proper structure of those and proper funding is what makes those make sense. The wrong funding with the wrong structure, it's a disaster. Like, yeah, you've still got the permanent life insurance. It's not a bad thing, but keep the main thing the main thing. We got to understand what our clients' goals are and what their abilities are, so we can structure it properly so they can fund it properly. If it's properly funded, like, my son's going to have over 6 figures by the time he gets to be 18 years old. Probably multiple. He ain't going to know about it because mom and dad own the policy. All right. And that means that We own it, and we're not going to pass it to him until he gets his head on straight, and he's not going to woohoo Vegas, right? But then we go sit down and explain to him how it works, what it works for. The power with that plan is, let's say I say, hey, son, when you're for your senior year, I'm going to pay for that stretch Hummer limo for you. And it's junior. It's like, Dad, I want the stretch Hummer. I want the stretch Hummer now. No, I'll pay for it for senior year. I want it now. Okay, it's coming out of your money. Whatever. All right. Here you go. Spend it there. Right? He turns 18. Who knows what college is going to be in 16 years? What's it going to be in 5 years? Shoot. Right? So if he needs the funds for college, great, it'll be there. But why not leave that money in the account? Continue funding it as we have been. Let it grow and mature till he's 24, 25, 26, actually gets out of college after changing the major 3-4 times. Now, that money's probably doubled again. And there's so much more money that can be used to pay off college debt if necessary. But use all the grants, loans, and aid and everything else we can qualify for. And now we've got a lot more money that can either pay down that debt. It can buy probably a much needed car. It can be a down payment on a house. It can pay for a wedding. Or let's say he turns 18 and he wants to start his own business. He wants to create the next Amazon. Well, guess what? That exists because my buddy Jeff, his parents were able to give him a couple $100,000 to fund his dream. Well, guess what? We're going to be able to do the same thing for our son. You've got a dream, you got a goal, you got a vision. Guess what? We're going to be able to help you fund it so that you can go out and be successful. You don't have to follow whatever that path is that everybody else says you're supposed to go down. And there's not going to be any type of penalty for us not using those funds for college. Right? We look at our 529 plans and some of the other plans out there, they're slated for college use. If we don't use it for college, there's taxes and penalties. Why am I going to get penalized for saving for my kid? Right? That doesn't resonate with me. And then we talk about using them as adults. We've got all that money that's in there. Like I said, an emergency happens, right? The washer, the dryer, and the stove break at the same time because that's how it goes, right? And the fridge is probably not far behind. So instead of pulling money from a 401k or something, hey, let me show you how you can actually fund a different type of plan that's going to give you access to that money anytime you need it without penalties, without taxes from the state, without federal taxes. And, you can do whatever you want with it. You're not pigeonholed into when you're allowed to touch your money. So we show people a lot of times, hey, you're funding a 401k. If you can qualify and it makes sense, let's look at a different plan as an addition to that. Go and take your company's match, but let's show you how you can actually have your money grow better for you, give you more protection, because the money, especially in an IUL, it's actually protected from the losses of the market, right? The money mirrors the market, but it's not in the market. So if you think about zero being your hero, if you never lost money in any investment you made, how much more money would you have?
My son is 16, just turned 16, August 31st, and he is on the great path about his financial literacy. He had a summer job and saved up all of his checks, has not touched his money. I know you say, me having a policy on him, of course, but you say it's never too young. You're never too young to get a policy. What is the age limit for someone to obtain a policy on themselves? So say he wants, he's all about my money making his money for me. Like I want to make money in my sleep. That's his goal. Is there an age limit on someone obtaining a policy for themselves?
18. Like as young as 2 weeks old with the Social Security number, they can get that policy. And him being 16, you can open a policy for him, right? You be the owner and the payer of the policy because he's not 18 yet. So once he turns 18, he could then take over that policy. But you could get the policy for him now. He gives you the money, you fund it into that policy. And again, we show you how to fund it into that policy properly. We don't want to dump it all in at once in most cases. We want to systematically put it in there. But no, you get the policy form right now because what you're doing there is, number one, you've got that savings account form where it's able to grow and compound for him. and he's got to put a little bit more effort, right? He's got to make a couple of phone calls, well, a phone call to get the funds instead of just going to transfer from savings to checking, right? Exactly. But you're also, that's setting up that legacy for the family, right? For his wife, for his kids, for your grandkids, for your great grandkids, right? That great grandma done went and set this thing up for us, and hey, we started this thing, we got the family trust, and now this money's here, and it's because you taught your son the right tools, the right mindset when he was a teenager to work hard for his money, to save his money, and you showed him the right place to save it in, right? And if for some reason we can't get the coverage on him, there's other ways that we can do it. There's other types of accounts that we can set up to put the money into, that we can make additional contributions to, that'll still be protected from the losses of the market, which is really a big thing for me. I love setting that foundation. I don't like losing money. I've been busting my tail since I was 14 legally. You don't talk about all the side jobs before that, right? But but hey, I don't like losing what I worked hard for. And when we talk about, hey, what am I using? How am I saving my money? A lot of times people they're taking that risk. Take that risk when it makes sense. Set your foundation first, right? I go to Vegas, I take my lunch money for a week. I don't take the mortgage payment. I don't take the car payments. We need that. If I got to eat some top ramen for a week, I can handle it.
So I'm with you on that side gig, because I had a paper route when I was 7 years old. So I want us to leave on a high note. I think that setting our children up for success, regardless on how we got our start. I was not the most financial literate person. I did have a great friend who helped me start to guide me doing investments and stocks and things like that, and telling me, you know what, you might want to, go ahead and look at these policies that you got going, because I don't think that you're actually making anything from it. It may cover your funeral, So someone put that bug in my ear a couple of years ago, and I'm very, very grateful for that. Like I said, setting our children up for success, and them not having to learn the hard way just because, you got to pull yourself up by your bootstraps. And it's like, well, I had to figure it out for myself. We don't want that. We want to break the cycle, right? And why not start with the financial literacy, life insurance, the importance of life insurance, for our children, for them to understand that it could be lucrative, as well as a safety net, because there's always the what if, right? And we want to make sure we crossing our T's and dotting our I's and all of this. So I want to say thank you for coming on this evening, Sean Johnson. We love it when you guys come every time. I get each little nugget every time. My phone gets filled up in my notes. And I feel that, I take something with me and I'm able to apply it. So I really do thank you for all of the information. In lieu of Life Insurance Month, I want you to go ahead and give your shout outs, your thank yous to everybody, and leave the community with a couple of great parting words, just to, stress the importance of life insurance, especially in our community.
Absolutely. Just now. Do it now. And do it means look into it. Maybe for some reason you can't start something now, but at least take that first step to look into it now. Excuse me. I'll thank any and all of my mentors that may be watching or see this at some point. I'm not going to mention names because I've had a good handful of them, but I don't want to miss anybody. But anybody that's helped me along this way, that's taught me, because like you said, I didn't know this stuff either, right? I was that kid that went to, I'm going to date myself here. I was a kid that walked into Circuit City and got a $10,000 limit credit card when I was 18 and bought that 36-inch flat screen, not flat panel, flat screen. That TV weighed like 600 pounds, right? And like, oh, 0% for 24 months? Cool, I can pay that off, no problem. I got this. On that 25th month, I realized I hadn't paid that $2,000-3,000 off, and all that interest had been building all that time, and it hit. I bought that TV 2 or 3 times. I remember being there in that my first apartment there, thinking I was good, and then remembering a couple months later, and we sitting there counting, trying to figure out, hey, well, how are we going to pay these bills off, and scraping up $20 we could order a pizza, right? We've all been there. We've gone through those struggles, and that's why it's so important to reach out. That's why we keep coming back here, because we want to connect with you. We want to talk with you, have that conversation, and show you what the options are. It's not going to cost you anything to reach out to us. We do not charge anything. Okay, all of our companies we work with, if we're able to connect you with one of them, they're going to take care of us. All we're asking from people that we sit down and help out with, hey, did you feel the information we shared was valuable? Did we treat you with respect? Well, who else could you know that you could connect me with, so we can show them how to protect their family, protect their money, protect their lives, right? We just want to go out there and have conversations with more people. And the goal is to show people how they can be successful, right? Like I mentioned, there's no secrets for us in this business, right? If there's a way you can do better, I'm going to show you how to do better. I'll show you how to put more money in your policy when you can, so it grows better for you. I'm not going to say just get another one because you can. Let's make the existing stuff work. Let's max that out before we try and do more. That's the purpose of this. Our goal is to put people in the best financial position that we can get them in. So be it starting off with a budget, be it, hey, help me find my money that I left with my ex company, right? Let's help you roll that money over. Let's protect it from the risk of the market. Let's stop that bleeding. And let's just have that conversation to see what can we do, what direction can we go. Maybe we're not ready to make a move right now, but if you don't know what direction that move needs to be in, how can you work towards it? All right, so you can't unhear it. You've heard it. Reach out to us. Give us a call. Send an email over. And I'll also say, hey, look, for all those people that are looking for that extra income, if you think this is interesting, if you want to learn more about it, hey, we are always open to saying, hey, look, is there other new talent out there? Is there young new talent? Is there old new talent? Seasoned new talent. If you've got an interest in making some additional income, reach out, give me a shout. Let's talk about it and see if we can go through and not just help you out, but show you how we can get into your community. Because I don't know the people that everybody else knows. So if we go in there and we help one person, that's great. But let's help out both spouses. Let's protect the entire family. Let's protect the block. Let's protect the community. Let's make sure everybody we know and care about has access to this information that's typically been held up by that top 5% of people. Let's bring it down to everybody else, because we all deserve it. And we're here to make sure it happens and give you our best that we possibly can. So both sides of the conversation, again, I always appreciate being here, especially on Life Assurance Awareness Month. Hey, take the action. Let's give a call, send an email, send a text. Let's do it now while we're as young and healthy as we are at this moment.
Thank you so much. Thank you so much. We truly appreciate your contribution to the community and giving these nuggets to everyone. Like he said, now, the time is now, people. So go ahead, reach out and ask those questions. Thank you so much, Sean. We appreciate you.
Anytime. Thanks for having me.
Well, community, there you have it. Another great educational Thursday. You got informed, you got educated, and you will leave tonight with a couple of great gems. Like he said, unfortunately, to be repetitive, now. The time is now. Don't wait until it's too late. Don't wait until you have to try and figure it out to rob Peter to pay Paul. It is okay. And you're never too young. You're only going to be this young once in your life, So you're never too young. Maybe even if we are up in age, it's okay. Something is better than nothing. And to make sure that you are leaving your legacy in the hands of those who love you with something to be able to move forward on, what better gift is there? I want to say thank you for tuning in this evening. Want to say hi to our great executive director and our other co-host, Mark, who are both out in the community I'm trying my best to hold it down for you guys. We'll see you this Sunday on our Sunday conversation. Thank you. Have a great night.